Switching gears here, streaming giant Netflix is set to report earnings on Wednesday. Shares, they are trading lower this morning by about a 0.3% move. Investors will closely be watching for how the company's crackdown on password sharing impacted subscriptions in the third quarter. Hit me. And a possible price hike? Well, for more on this, we've got Yahoo Finance's Alexandra Canal. Ali, what do we know? What are we expecting?
Well, Brad, this is the final report of the year and will likely set us up for what this company will look like in 2024. It is expected to be a fairly muted report, but there are a few key factors that I'm looking at. So here are the top three. Number one being average revenue per member, otherwise known as ARM or ARPU. That is expected to be flat to slightly down in the quarter compared to the same period last year. And that's despite the streamer adding an estimated 6 million new subscribers in Q3, thanks to that password sharing crackdown. So any further disappointment there is going to spook investors, especially since we saw ARM decline year over year in Q2. Another thing I'm watching is guidance, particularly surrounding revenue and margin guidance. That slower build of the ad tier has impacted Netflix's goal of double-digit revenue acceleration, with the company warning it's still in the crawl phase of that build. But investors are going to want to see some progress on that front. Margins as well. Netflix guided to softer full-year operating margins between 18 to 20%. That's after margins peaked at 21% in the first quarter. So whatever the company says on those metrics will likely be closely watched. And finally, we need some more color and updates on the password sharing crackdown on the ad tier. How is it going? What are the numbers? What's the consumer reaction? We haven't really received a lot of those details there, and I'm not sure how much longer Netflix can be vague about that. And then in the background, we have the potential of more price increases. I think that's certainly a reality. Perhaps we get that announcement tomorrow. Perhaps management gives a little hint of what's to come. And on top of that, the writer strike, that's over, but the actor strike is still ongoing. What does that mean for free cash flow? What does that mean for content? So all in all, this feels like a report that's more of a setup of what's ultimately to come for this company, but still a few key metrics to keep your eye on there.
All right, Ali, some things to keep in mind as we wait for tomorrow's report from Netflix. Thanks, Ali.